Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Wednesday, June 24th, 2009. The Aussie Yen pair extended its gains from yesterday in today's overnight and New York morning trading, climbing to test the area around 76.80. Stocks were up around the globe, with European markets seeing strong gains. The 270 pip rally for this pair, since finding support at 74 yesterday, is now a 61.8% retracement of the down move seen in the previous three sessions. The pair did run up against the downward sloping line of resistance, which is where the pair stalled prior to the FOMC meeting today, and receded from there in the wake of the announcement. The Euro-Swiss franc pair saw a huge surge today as the pair approached the 1.50 level overnight. That level has been established as the point in which traders believe the Swiss bank is intervening in order to make sure the Swiss franc doesn't appreciate further against the euro. We saw a bit of this last Thursday, but today's move was much more substantial, measuring almost 360 pips from low to high. There was a big move initially prior to the New York Open, and another big surge after the European markets closed around noon New York time. The euro was generally weaker in today's session, and despite stronger stocks in Europe, the euro-yen pair slid 180 pips from its intraday high. It extended its losses after the FOMC announcement, which came around 2:15 p.m. Eastern, and that release worked to boost the greenback. Looking at fundamental news from the U.S., durable goods orders were up 1.8% in May, matching April's figure, when forecasts called for a 0.6% decline. Core orders, which exclude transportation, increased 1.1%, also defying forecasts of a small decline. New home sales in the U.S. in May disappointed forecasts, however, edging down 0.6% to an annualized rate of 342,000 units. Forecasts had called for an increase, but as more Americans continue to lose their jobs or are afraid of losing their jobs, they're staying out of the market or settling for cheaper existing homes. The South saw sales fall 8.5%, while in the Northeast, new home sales actually rose 28.6%. And the FOMC kept rates steady today after the conclusion of its meeting and gave a slightly more upbeat assessment of the economy compared to their last meeting. They also softened their language about deflation while keeping steady their plans for purchasing treasuries and other bonds. Though it was not a hawkish statement by any means, the door is now opening for the Fed to begin an exit strategy from the current low interest rates. The euro-dollar pair rose to a high of 1.4140 overnight following its steep gains yesterday. However, it fell back down to the 1.3950 level in New York trading prior to the FOMC statement as U.S. stocks ease off their highs from the morning. Following the statement, the greenback pushed the pair all the way to the 1.3890 area, wiping away the euro's gains from yesterday. The pound-dollar pair retested the 1.66 area, the third time it has done so this month during overnight trading. It was unable to break higher, and price turned around and headed back into its range that we have been seeing the past 2 weeks. Tonight, look for current account data from New Zealand and the leading index from Australia. Overnight, the UK will post its nationwide measure of housing prices, though that release may be subject to change, while the Eurozone will unveil data on new industrial orders. Tomorrow, the US will release data on jobless claims and its final version of first quarter GDP. And that wraps up today's coverage. Thank you for watching us here at CMSFX.com, and happy trading.